You're watching a WPTV special, Coverage Collapse.
Living in the Sunshine State for many is clouded by the pain of homeowners insurance.
I'm going to be needing help or else I'm going to have to sell. I don't want to sell.
Rising premiums, doubling, tripling in the last several years, putting the financial squeeze on homeowners and condo owners.
They can't be doing enough. People are drowning. They're being forced out of their homes. No, they're not. They're not. And I think we need to push harder.
The plot of Florida's coverage collapse thickened by rampant litigation loopholes, along with rising construction costs that left many insurers operating in the red and homeowners stuck with outrageous bills.
This year, it went up another 97% to $14,700.
Many are flocking to Citizens Insurance, putting the state on the line for potentially huge losses.
I certainly want Citizens to shrink back to being that true insurer of last resort, but our mission is to also be there when there's nowhere else in the private market. What good does it do if we shrink, but the Floridians have nowhere else to go? That's why we need a healthy private market.
Just a week after a double-digit rate increase was requested by Citizens, CEO Tim Serio joins me in West Palm Beach. We'll get answers on why your rates are going up and why others are being forced out and what the future is for the state's insurer of last resort. And I'm asking several more insurance leaders, where do exhausted Florida homeowners go from here? This is a WPTV special coverage collapse. And hello, and welcome to our coverage collapse special. As we mentioned, we want to, this time around, go right to the top of these insurance companies in Florida and try to get some answers for you at home about what's going on with insurance here in the state of Florida. As we mentioned, we are joined by Tim Serio, the CEO of Citizens Insurance, and Tom Gallagher, the COO of People's Trust Insurance out of Deerfield Beach, Florida. And we are coming to you from inside a house, which we thought was pretty appropriate here in West Palm Beach, considering the fact that both your companies insure tens of thousands, if not millions, of homes like this across the state of Florida. Mr. Serio, I do want to start with you, sure, because I think your company was the one that has made the most news within this month of June. Last week, the Board of Governors seeking a 14% increase in rates. I could ask the question, but I'm going to let Dana in Wellington ask the first question in an email, which is pretty simple. All of this insanity with these rate increases, what exactly are the rate increases for? Why 14%?
So Citizens is in a unique position. We have been, in the history of Citizens, we are the state-created insurer of last resort. And as the insurer of last resort, and this is true for similar types of insurance companies around the country, we're supposed to be a safety net for people who cannot get insurance elsewhere. To qualify for Citizens, it's not based on your income or your personal wealth. It's basically based on the characteristics of your home. So if it's an older home or a home on the coast, if nobody else wants to insure you, you come to Citizens. Well, many years ago, there was a policy put in place that froze Citizens rates, and we fell behind the private market. And then we were allowed to, we were put under what's called the glide path, where we could come up incrementally, but we did not keep up with inflation or other rate increases that other insurance companies receive. So the problem is now we are under a state law, a mandate under state law to be actuarially sound, right, but also non-competitive, to not compete with the private market. Right. Meaning we're supposed to be slightly more expensive as that insurer of last resort. Right. You also have a competing statute that's a glide path that caps our rate increases. So because the market is here, right, and our rates have been artificially depressed because of the rate freezing and the glide path down here,
you're trying to catch up.
We're trying to catch up, and our policyholders are actually paying below market.
Which is why I want to talk to Mr. Gallagher. You're a former state legislator, so you know exactly what he's talking about in terms of how Citizens operates and moves. But you're in the private sector with a private insurance company. Right. He's trying to catch up to the private insurers, but People's Trust also asked for a rate increase this year. You're still moving north of Citizens as well.
Well, we did ask for a rate increase last year, and we filed pretty much even rates this year, with maybe a slight down. And we see the trend to move down now that the laws changed in regards to the tort system, that was really causing a lot of problems. And you've heard the statistics that with 79% of all the lawyers representing claims are on 8% of the claims. And in Florida, we have 8% of the claims in the country and 79% of the lawsuits. Made no sense. And so the legislature finally got around with the governor's leadership to change that. And that's going to make a major difference. Now, it's going to take a while to work through it, but it is making a difference. And that's a very good thing.
All right. I want to talk more about rates, and I want to talk about some of those reforms in litigation in a moment. But first, some families told our WPTV reporter, Joel Lopez, that with the financial pressure they're feeling from homeowners insurance, they're now deciding whether even to stay in Florida or not and stretch their budgets or just throw in the towel and move to a more affordable state.
Over here, buddy.
Playing with chalk with her 3-year-old.
Oh, that's so pretty.
Emily Reddy and her son Skylar.
You want to draw the door?
Draw up what could have been their Florida dream home.
I want my kids to be able to experience what I grew up with.
A dream.
It's not in the cards right now.
That may be shattered as her insurance premium with Citizens went up from $1,500 in 2021 to almost $1,000 more at nearly $2,500 this year.
It's ridiculous.
And now Citizens announced an extra 14% rate hike come January. Do you ever get overwhelmed? Do you feel emotional when you think about it?
Every day. Every day once the kids are in bed and I'm alone because my husband's doing an overnight, I'm in my room crying because I don't know what else to do. And as a mom, you're supposed to have all the answers.
It's a financial tidal wave that has families drowning. For Ken Taylor, who said he's been with State Farm for over 30 years.
It's always been a little scary, you know, the whole game of insurance.
The coverage collapse. Seeing that happening to so many people in Florida, what goes through your mind?
It's scary. I mean, you don't want to see, you know, for no reason at all, your insurance just goes sky high.
And as we make our way through hurricane season,
honestly, I'd take the hurricane over the financial stresses right now, what's going on with the insurance.
Families like the Reddys,
there's got to be something somebody can do.
Hang on to their dream to stay with their family in Florida.
Otherwise, the middle and lower class are going to be out of Florida, and then who else is going to be here? Okay.
A lot of emotion there from a lot of homeowners, and I'm sure you gentlemen have heard the voices and you know what that's like. And as we mentioned at the top of the program, Mr. Serio, you're trying to raise rates to catch up to private companies like Mr. Gallagher's. But I mean, the emotional part of this, you do see where people are coming from and what they're saying.
Absolutely. I think we're very concerned. We don't want to be at the prices we're at. But what's happening is the worldwide reinsurance market is driving those rates up because of the losses that we've had here in Florida and the losses that they've had around the world.
But as you mentioned, you are flat with rates this year. I know People's Trust actually turned a bit of a profit on investments last year. And things are looking better, right? Lawsuits are down, Mr. Serio, as well?
And I think that's reflected in what you've seen in the private company rate filings, where the companies are seeing a benefit to the litigation, some leveling off of these reinsurance costs, even a lowering of the reinsurance costs, because these international reinsurers are noting that the litigation trends are downward. There's less frivolous litigation in Florida because of the reforms. Fraud is on the downturn in Florida, so that's being reflected. And on Citizens rates, again, we're not raising rates because we want to raise rates. The more actuarially sound we are, the healthier the Florida market, and that protects non-Citizens policyholders, basically 86% of the market right now, from an emergency assessment.
But 14% is about as high as you can go, right?
Under the rate cap, yes. If we were trying to get to actuarially sound in one fell swoop, it would be closer to 30%. Clearly, that's just not something we would be interested in pursuing even without the glide path. Right. But that's where we are as a market.
Right. Mr. Gallagher, do you see that in the foreseeable future, at least?
I think rates are going to start to go down, and I think that's good, and they should go down. There's no doubt. One of the concerns we had, if we don't buy enough reinsurance, then the companies go out of business when there's a storm. Mm-hmm. And that's even worse, because then everybody gets assessed in order to cover the losses. And one of the problems that you have with Citizens, if they don't collect enough money in their premium to be able to pay the claims, everybody's policy on their automobile, on their businesses, all are going to get assessed. Right. And that's the downside of Citizens being so big.
Reinsurance is a big driver of the rates, as we all know. We've learned a lot about the insurance industry over the last year. I want to talk about that in a little bit. We're going to take a break. We have more coming up, but we will talk about reinsurance when we get back.
We introduced a rate decrease for the first time in 9 years for a variety of reasons.
Saving money on your home insurance. It's a positive turn in Florida's coverage collapse. I talked to Security First about reducing rates this year. Lower rates for homeowners insurance is not something I've reported on until this year. Security First President Melissa Burt DeVries told me there is a reason for their 5% reduction, which they estimate will save their average policyholder $260 to $350 a year.
The weather has been awful, reinsurance costs have gone up, and fraud and litigation have also been a driving factor in increasing rates. What we have seen over the last couple of years as we've been able to raise our rates is that our experience has improved. There were also some legislative changes that occurred in December of 2022, and we are seeing the benefit of those legislative changes.
Security First Insurance, based in Florida, currently has about 130,000 policies in the state. I asked Melissa Burt DeVries to explain how their rates are set for homeowners.
We use census block groups, which are much smaller than zip codes. Some companies use zip codes, some companies use counties. It really depends on what the individual company wants to do. We also have a variety of products. That's another way that we spread out the risk is we have a product called our DP1, which is our very basic insurance product. It's still admitted and it still meets the mortgage requirements all the way up to an HO5. Which is, which has very broad coverage and, has all the bells and whistles. So we have also a variety of policies that will fit different risk characteristics. So we can spread out the risk by policy type as well as geographic considerations.
Condos, a big part of life in Florida. Are they a bigger risk? Do companies view them as a much bigger risk right now than single-family dwelling homes?
Where you do see a hard market right now is for the condominium building. So the large structure, the overall condominium building, and where that has become exceptionally difficult is in South Florida, where there's a large concentration of condos, and in particular for older buildings because of what happened at Surfside, or buildings that have older roofs, maybe haven't been updated, maybe haven't been fully mitigated. Those could have a harder time. So there is a hard market right now out there for those commercial risks. It's considered a commercial risk, the whole building.
Covering the risk, she tells me, means paying for reinsurance. And with a wild hurricane season predicted, the costs, she tells me, are steep.
This year, we bought just over $750 million of reinsurance, and that covers our about 132,000 policyholders. And to put it in perspective, you talk about storms as in 1 in 100-year storms, 1 in 200-year storms. We bought to the 247-year event. So, not the 100-year, not the 200-year, but the 247-year event, which I know is a very specific number, but the way the modeling works, that's how it goes. So we basically bought to the 250-year event.
And that's something no one wants to see, especially homeowners and insurance executives. 19 insurance companies in Florida are either seeking a rate decrease or no increase for 2024. And seeking is a key word because those savings won't happen until later this year or even early 2025. But the filings by these insurers, that's a positive sign that the state has been looking for. All right, our coverage collapse continues. We are talking with Citizens CEO Tim Cirio and the COO of People's Trust Insurance in Deerfield Beach, Tom Gallagher. Gentlemen, I want to go to some emails that we've gotten from some people, and it kind of sums up the way a lot of people feel. Debbie wrote to us, it seems like they're trying to make all of us retirees homeless, and that kind of taps into some of the emotion we were talking about that you're hearing from people. Another email from Jackie wrote, we don't need improvements. We've done everything. We finished this house 9 years ago. No one will insure us, no one that we can afford. I'd like to put this up to both of you. I do hear a lot from people who say they have put a lot of improvements in and tried to fix up their houses, and their insurance still going up. Tom, you're in the private sector. You've had a lot of state experience as well. Why does that happen to people?
Well, one of the good things is as you do fix up your home and you do mitigation to keep storms from damaging your home as much as they would have before you did the improvements, is that your rates do go down accordingly. And that's a good thing. The bad thing is that the cost of fixing homes and the cost of construction and everything has increased quite a bit. And so the insurance companies have to have enough money to be able to buy the reinsurance that they get for storms and be able to pay, because we as insurance companies have a deductible just like the homeowner does, and we have to be able to, it's called retention, and we have to be able to pay that. So it's a matter of balancing, and we want to keep the rates as low as we possibly can to be competitive in the marketplace.
Mr. Serio, costs of homes and replacement costs and inflation, it all comes into play also, right, for you?
It's huge. I mean, we enjoy when our house appreciates in value, but then it's more expensive to insure it, and of course the cost of construction to replace your home is through the roof, and that has been a significant driver of costs going up. But as far as the reforms that have gone and the filings that you're seeing where you're starting to see a dip in rates, I mean, we would love for that to continue. Part of the reason we think that Citizens, the problem with Citizens is we are competing with the private market right now. So when you ask the question about Citizens rates increasing while others are coming down, we're already below market. We're hampering new entrants coming into the market by being too cheap. The more entrants that come in, the more competition.
Citizens now is at one. Go ahead.
There is a chance that you could be assessed a large amount of money if you're a Citizens policyholder. So you're in danger of paying a lot more because Citizens runs out of money. And they immediately start assessing all their policyholders, and people need to realize that. Citizens may look like it's cheaper, but it could be a lot more.
Yeah, we know about that. We've talked about the hurricane taxes, they call it, which is a phrase you don't like.
I mean, for good reason, right? It's just, it's not something, it's a place where we don't want to be. If we have, the good news is if you're in Citizens,
right,
we will always be able to pay your claim, right? Because we have that assessment authority, in fact, that assessment mandate. The problem is, you first would get hit with a surcharge if you're a Citizens customer, and then after that, an emergency assessment on Citizens customers as well as everybody else if we don't have enough surplus to pay claims.
And a lot of Citizens customers I talk to, get this sense that, and it's probably true to some degree, Citizens doesn't really want them. They want people to get into the private market. So you've had these takeout offers going now.
Right.
There's been different waves of these throughout the history of the state. We're in I would say, a rather aggressive one right now. Tell me where you're at in terms of takeout policies heading into this summer.
So we've had about 132,000 policies taken out so far in 2024.
Right.
We think we should end the year with about 400,000 total, maybe a little north of that. We're going to slow down. As we get into hurricane season, you don't have the takeouts that you see.
You don't have them during,
right.
Takeout. Nobody wants to take the risk.
Right. So our actual policy count will probably start to tick up again, which we expect. But then in the fall, when the takeouts resume towards the end of hurricane season, we should start to come down significantly.
Citizens is now at about, what, 1.2 million policies?
1.21 million policies.
And roughly 100,000 in Palm Beach
About
County?
111,000.
111,000, and then collectively on the Treasure Coast, there's a map we have, it's about 30,000. Mr. Gallagher, how many policies does People's Trust have in the state of Florida right now?
Because totally about 86,000.
And you've trimmed down your numbers.
Yes, we have.
Over the years
we
as
were
well.
160-some thousand 2 years ago, and we've trimmed back.
Is that due to risk?
It's due to balancing risk and making sure that we're not overly concentrated, and the cost of reinsurance.
Is People's Trust involved in some takeout offers with Citizens?
We've looked at it. We've never taken a policy out of Citizens to date.
Why not?
We do it the old-fashioned way and let the agents, find the policies for us and sell us. And we've been managing to sell enough on our own without needing to take out.
Mr. Serio, are those takeout offers getting better? Because I know last year they were quite high for some people, and those who ignored them just because they, by mistake, ended up paying a lot more.
Yes, and when we found out, when Citizens found out about it, we let a lot of these folks back into Citizens. We actually mounted a campaign to tell our policyholders, you've got to open your mail. You've got to check your mail, check your email. We communicated with the agents, hey, your customer received a takeout offer. Because if the takeout offer, for your viewers, if the takeout offer is above 20% of what they're paying, they can remain in Citizens, but they must opt to stay in. That's why we're really trying to get the word out there. State law allows them to stay in, but they have to opt to stay in. If it's within 20%, then they're no longer eligible for Citizens. They don't have to accept the offer. They can go elsewhere, but they're no longer eligible for Citizens.
Got to take that action. Cannot ignore it.
That's right.
Okay, we're going to take a quick break. We have more to come.
You're watching a WPTV special, Coverage Collapse.
And we're back inside our house here in West Palm Beach with Tim Serio, the CEO of Citizens Insurance, and Tom Gallagher, the COO of People's Trust out of Deerfield Beach. We were talking about reinsurance in the first half hour, and I want to kind of get back into that because it's very important. It involves the insurance that insurance companies get to protect themselves. We are expected to have a very active hurricane season by a lot of smarter people than me on the weather. Do those predictions scare either one of you or give you cause or reason to go out and buy more reinsurance?
Well, we're obviously concerned about having a lot of storms and big ones. That's why we buy reinsurance. And really, we buy reinsurance to protect our policyholders so that we have the ability to get the money to pay the claims in the event of a disaster.
Right, because what happens if a company like yours doesn't have the
Well,
money?
it's happened, and it happened back when I was insurance commissioner. It's happened since then. The companies go out of business. And then the claims are paid by the Florida Insurance Guarantee Association, and there's a limit to how much they'll pay. So it's $350,000, I believe, is what the limit is. And then everybody gets assessed to pay for that. So it's not a good thing to have companies go out of business.
So how much reinsurance does People's Trust have this year? How much weight are you putting into these predictions?
Well, listen, we buy in excess of 130-year coverage,
right?
And we buy it for 2 storms, and if one comes, then we'll buy it for what's the third.
Mr. Serio, the last time I talked to you was in Clearwater, and you were kind of hedging your bet. You didn't want to tip your hand too much because you were negotiating.
We're in the market. We're just now finishing up, but I will tell you, we have. I think that the weather forecasts, especially toward the most recent ones, I think that maybe some of the reinsurers overseas were watching those and maybe got a little spooked toward the end. But we bought reinsurance. We have a mandate to buy reinsurance under state law. And to Tom's point, it's to protect the policyholders to make sure we can pay claims.
And how much does that drive the price of a premium?
Well, it has to be included because that's the only place the money comes from.
Right.
So what should be about 30% of the premium today is about 60%. So it's pretty much doubled over the last 5 years, 6 years. And so that's why people are getting these huge increases. And the reinsurers aren't, I mean, they're sort of these, they're not really believers yet. We told them, look, this law is going to make a big difference. The tort system is going to stop all these lawsuits that are costing you all so much money.
Well, yeah.
And they say, well, we'll see a storm and see what happens.
Yeah, and you're seeing less lawsuits, both of you, right?
We are.
Absolutely.
We are.
It is coming down, and that will drive rates down.
So why are you asking for rate hikes?
Pay for the reinsurance. They haven't believed you yet.
Yeah.
There you go.
It's still a cost, right? It is still.
I want to talk about condos because.
Well, can I add something?
Yeah,
I mean,
sure.
I will say this. We have this glide path that caps our rates, but we
Yeah.
have sort of our uncapped rate. What does our rate need if we were charging actuarially sound rates?
Right.
Because of the reforms, that need went down by $900 million. Our projections, $900 million last year. This year, our projected rate need to be actuarially sound went down by $500 million because of the forecast on the litigation. So, I mean, I think I think the whole market is experiencing the benefit of the reduced litigation.
I do. It's a good point. I want to talk about condos real quick because we're hearing from a lot of condo owners. And Mr. Gallagher, we were talking, if anybody's feeling a lot of pain right now through insurance, it's condo owners and condo associations, right?
They're getting a double whack. They're getting a whack because they now have to have their 40-year and their 50-year examination, and their engineers are coming in saying, by the way, you need to do this and that and change your windows. You have to change the way your roof is got to be redone. Your pool up on the 9th floor needs to be restructured to hold that kind of weight. And so they're getting huge assessments, not even counting the insurance side.
This is all from the Surfside tragedy.
Well,
a lot of it
a lot of these
reforms
existed, but what's happened is they've firmed up more things that people need to do and condo associations need to do to make the condos safe. They don't want to see that happen again, and none of us do.
Mr. Serio, you're nodding your head. I mean, Citizens is involved in condos, right?
That line of business has skyrocketed. You know, there's some folks that insured condos that left the market, and Citizens, we've grown exponentially in that area, and it's a huge amount of exposure for us.
I mean, a lot of people are leaving. They're selling their condos, and a lot of elderly people are telling us that this is not the Florida dream that they had hoped for or had envisioned, moving to Florida and spending their golden years here in a condo. They're being priced out of it.
Well, nobody likes to see that. We want Florida to be a place where people are happy and have a good life, and it should be what they came for, to be able to retire, and hopefully it'll get back there. It really needs to get back there.
So in a perfect world, condos and homes, Mr. Serio, you're the most expensive insurance on the block, right? Because you're the insurer of last resort.
Ideally, we're at the top of the market. We're there for policyholders who need us, but there's a robust private market that takes policies that belong in the private market.
And when we say robust, that's companies like Mr. Gallagher's who are keeping a hold on rates and actually being lower than Citizens.
We're trying to compete in the marketplace, and the way you do that is you keep your rates as low as you can.
All right. We have more to talk about. We're still not done, but we will continue with our coverage collapse in a moment.
I'm looking for a problem that customers care about, where we can use our skills to give them something, that they value.
As insurance companies have pulled out of Florida, a new insurer to the state tells me how they're breaking the model on writing policies here. In a wide field of newcomers to Florida's home insurance market, one is getting a lot of attention.
We started Kin in 2017.
Sean Harper talked to me from his Chicago area home, and where Kin, the name refers to family, he tells me, is headquartered, with a business model that you'd expect from a young entrepreneur who now has ads running in Florida.
Rather than selling through agents, we actually do the work of the agent ourselves. So the customers deal with us directly. They can deal with our website. They can deal with our mobile app. And they can also deal with over email or text message or phone or however they want. They can deal with our licensed in-house agents.
Harper dropped words on me like tech forward and streamlined to describe how Kin comes up with their structure for setting your rates. A detailed process, he told me, that looks at the risk, the price of rebuilding, and costs. And yes, even profit margins.
So what we've done is we've created a set of data science algorithms that can take all of the unstructured data that's out there in the world, and we can really have a really accurate understanding of how is your house built. And that allows us to, first of all, ask you less questions as the user. I don't need to ask you all these things because we just know.
Right.
And it also allows us to be able to price and underwrite very accurately, which is something that our, every insurance company that writes in Florida is dependent on reinsurance. And that allows us to, the reinsurers really like that accuracy.
And reinsurance is a big driver to rates. And this year, Kin bought big, over $1 billion of coverage in a year predicted to be a very active hurricane season. And so Kin, now in 10 states, is jumping into the Sunshine State, where other national insurers seem to run away.
As an entrepreneur, I want to solve problems people care about. And, when I was talking to people, I had the first idea for this company, and I was talking to people who lived here in Illinois, and I was like, hey, I'm starting this insurance thing. We think we can use technology differently. And they'd be like, oh, that's kind of neat. But then I'd talk to somebody who lived in New Orleans or Houston or Tampa or Miami, and their ears would perk up. They'd be like, no, that's really interesting. Let me tell you about my problems with insurance. Let me tell you how expensive it is, how hard it is to get, what a bad experience it is. And I was like, oh, that's actually what I'm looking for. I'm looking for a problem that customers care about, where we can use our skills to give them something, that they value.
This month, I met a Palm Beach County woman who says she had a hard time finding homeowners insurance because of the solar panels on her home. And kin, she says, was the only policy she could find at the time. Kara Clark has Tesla solar panels on her roof, along with charging batteries in the garage. At least 5 insurers told her no. So I asked CEO Sean Harper why kin doesn't view solar panels as a problem when so many other insurers do.
We've looked at the data, and in our portfolio, there is no reason to not allow solar panels. They don't cause higher losses, or we haven't seen that historically. And obviously, more and more people have them. I have them on my house, and I love them. You know, I love not getting an electric bill. It's great. And you know, you can make an argument, actually. Now, we haven't seen this in the data either, but you can make an argument that they actually protect the roof, because the solar panels are actually really strong.
So the lesson I shared here is that if you are thinking about getting solar panels for your home, check with your insurance company first to make sure they won't drop you. Seniors in a struggle to stay in their homes. It's become harder with the rising cost of homeowners insurance. In May, I talked with one woman trying to hold off her own coverage collapse. Inside the small house near the Lantana Hypoluxo line, the homeowner is having a tough time.
I cried about it. I took a whole day of crying about it.
75-year-old Carmen Safante isn't even talking about her fight with cancer. She's talking about her insurance. A notice from Citizens of another increase, this one for around $300.
I alerted my family, you know, I'm going to be needing help or else I'm going to have to sell. I don't want to sell.
While the insurance increase on Carmen this year may not be large, she says it's what's happened to her and many other seniors on fixed incomes in Florida over the last several years. Her insurance at this house going up over $3,000 in the last 3 years.
It's going to happen on everybody. Their Citizens is going to go up.
Insurance agent Robert Norberg says Citizens' annual increases are capped. The state insurer of last resort, they say, was never designed to be a bargain, but rather a last-ditch safety net.
There are people, and I've spoke to policyholders, particularly in South Florida. Folks don't want to leave Citizens, right? They sometimes, and in many cases, were cheaper. But that's a whole other discussion. That's not necessarily a good thing.
But for Carmen, there is no other choice. No insurer willing to take on her small home.
Problem we have, like in this lady's case, is eligibility for other carriers. She's not going to qualify based on the age of the roof, age of the building, location.
I work hard to have a home.
Right.
Now to try to maintain a home.
Yeah.
It's really getting hard.
She is a wonderful lady to meet, and she makes an interesting point here, or at least Robert Norberg, the insurance agent, makes an interesting point. These homes in Florida are getting older. They're not getting younger. And Mr. Gallagher, maybe you can give me some insight a little bit as to why private insurers maybe don't want to run to insure a home that's 50 years or older.
Well, the main reason is because they're very vulnerable to windstorm. And we know that if you build a house under the current code, and everywhere there's been a storm over the last 3 or 4 or 5 years, you'll see those houses built to code, pretty much no damage. And you'll see the homes that have not been brought up to code and are older, major damage. And that's the problem.
Mr. Cirio, she is kind of the person, I guess, Citizens is designed for, right? She can't find any insurance anywhere. She does not have an expensive big home. She's got a little house, and she just can't find insurance anywhere.
That's right. That's right. That's exactly the type of person that should be in Citizens, as opposed to a lot of different newer homes, maybe more expensive homes that have come in because companies have gone under because of the unhealthy market.
Right.
The idea is to shrink, to be there for folks like this person,
And I want to talk to Mr. Gallagher about that, about Citizens, because I'm glad you came here, because you were the insurance commissioner during Hurricane Andrew.
I was.
And that's really what was the nexus for Citizens Insurance, wasn't
it? It was. We needed to have an insurer of last resort. We had a really bad time after Hurricane Andrew because no companies were writing any business at all. And the market won't work. And the whole economy of Florida won't work with no insurance. People can't buy or sell a home. People can't move in, they can't move out. It's an absolute disaster. And I remember being in federal court for about 4 hours on testifying because I got sued because I basically told the companies that they had to renew the policies because we didn't have anywhere else for them to go. And now that's the law in almost all the states when you have a catastrophe.
I got to bring up this little trivial point. I mean, you came up with the name, didn't you?
Yes, I did. Citizens. My staff told me it sounded socialistic. I said, well, you know what? That's what it is. That's what we're going to call it. And that's why it's Citizens.
All right. Well, now there's talk about Citizens changing, right? I know there was an idea floated in the last legislative session about making Citizen expand even more and give everybody wind coverage only. I'll let either one of you chime in on that.
I'll just tell you don't win by doing that. It's not a win. It puts a huge burden on everybody in the state and a huge burden on state government. And the truth of the matter is the private sector does it right. And these kind of losses need to be shared across the world. And the reinsurers across the world need to share that in order for us to pay those claims.
Mr. Serio?
Yeah, I mean, I had to testify on that bill. And look, we are a governmentally created entity. We'll go in the direction our board and the legislature and the governor and the CFO want us to go in. But that would have a huge price tag. And to Tom's point, I mean, if we went down that road of being the wind-only provider of first resort in Florida, we would have about $3.2 trillion in insured value. In other words, that would be the price tag of the homes and businesses we would insure. We would have to buy about $5.5 billion in reinsurance, according to the figures we ran. The price tag is untenable.
And remember, the customers are going to have to pay the rates. Mm-hmm. And so it's not going to be cheaper. Everybody thinks it's going to be cheaper because it's Citizens, it may well be more expensive.
It does work to some extent in Texas and California in a different form.
Texas is much smaller than we would be with wind, much smaller. It's comparing apples to oranges. The figures are much, much smaller. The number of insured homes is much smaller. It's just it's not the exposure Florida has.
Well, all right. So you talk about you're taking on a lot more liability with something like that. There are already questions about what Citizens can pay now, and I have to bring up the U.S. Senate committee investigation into Citizens because there is some questions being raised in Washington that Citizens even now may not be able to pay out everything and may actually go to the federal government for a bailout if we have a particularly bad hurricane season.
I would say the only place where you're hearing those comments are out of Washington. Nobody in Florida is talking about that. The governor, the CFO, nobody in the legislature, Citizens has never talked about seeking a federal bailout. And this is the great part of Citizens, and that's what we were talking about earlier. Because of our assessment authority, we will always be able to pay claims. Right. But the problem is, if we are too cheap, then at what cost? We're assessing policyholders in Florida who aren't even Citizens customers who are already paying generally higher rates. The last Senate hearing, the chairman of the budget committee said that, well, you guys would have to come, my understanding is that the analysis was we would have to come and seek a bailout if there was another hurricane similar to the Great Miami Hurricane of 1926. We model for that. That is not true. We could still cover that with the assessment authority. We don't ever want to have to go there. Right. We want to minimize the risk of assessments, but this is just a lot of. Okay. We'll keep answering the question.
All right. I'll let both of you have a last word for about 20 seconds each here. Are you optimistic or pessimistic over the next year with this insurance landscape we have here?
Well, I think that, look, most people, what they think about, and they're absolutely right, is how much do I have to pay for it? And what coverage am I getting for it? And I see the legislation that was passed over the last few years has made the difference we need, and we will see rates begin to come down, and they won't go down as fast as they went up. Unfortunately, I wish they would, but they are going to continue on a glide path down instead of up, and that's really what we need in this state.
And Mr. Serio, I guess the opposite is true. Your rates will continue to rise, and your numbers will go down as the private market improves.
Well, but I would say this: I think the market is going to continue to recover. I am very optimistic. I think as the market continues to recover, we will actually begin to more quickly approach actuarially sound. So we'll see. Hopefully, we won't need to ask for 14% next year. We will see. But I'm very optimistic.
All right.
Good things are happening.
Tim Serio, Tom Gallagher, it was a pleasure talking with you both. I'm glad you were able to come and talk with us And get us up to date as we head into this hurricane season for 2024. Thank you both.
Thank you.
All right.
You're welcome.
That wraps us up for right now. We're back with a little bit more. Stay with us. Before we go, an important date is coming up. July 1st is the day the My Safe Florida Home program reopens. The program offers free inspections and $200 million in funding for $10,000 grants to help homeowners fix up their homes against storms. The program this year is giving priority to seniors and low-income homeowners. Chief Financial Officer Jimmy Petronas was in town this spring, encouraging people to apply.
We were with Security First last week in Volusia County. Their participants in the My Safe Florida Home program saw their premiums drop 39.6%. So here is one carrier who is tracking the savings by participating in the program where they had a 40% drop in their premiums. That's exactly what the program's designed to do if we can educate the people to take advantage of it.
Jimmy Petronas, Florida's chief financial officer, wants all of us to avoid My Safe Florida Home fraud. So here are 5 things you should keep in mind when going through the grant process. Verify credentials of any contractor or inspector claiming to be with the program. Research reputation and history before hiring anyone. Get written estimates. Understand what to expect about the inspection and improvement process, and report any suspicious behavior. To apply to the My Safe Florida Home program starting on July 1st, go to the website on your screen, mysafeflhome.com. I've heard from so many of you over the months I've reported on Florida's insurance crisis, frustrated and worried about your coverage, and I won't stop trying to help you navigate this troubling market. Please reach out to me with your questions, your issues, and I'll do my best to help get you answers. My email is on your screen, matt.sczesny@wptv.com. You'll also see that address on my Coverage Collapse stories on our website. Thank you for joining us for our Coverage Collapse special. You can find all of our insurance stories on WPTV.com. Have a good night.